Inflation is happening. We got our first actual inflation signal, so I'm going to show what actual inflation is and then how it usually affects the stock market. Um, but let's look at the S&P. So we did not hold this coil that I thought we were going to hold here, and it looks like we're coming back. Maybe check this channel line. I do think that this bottom is still in. I am still targeting this area up here, where the next lines are. And yeah, this is interesting. We'll see if this is like just like one stab to take out the stops. But there's a ton of puts here, starting around 4,000 this week and next week. And there's just a pile of shorts and puts that go out farther than that. But this 4,000 level has a bunch of puts. I don't think the market really wants to go down there. I think if it touches the green line, it's still gonna close up here where those are gonna expire. And then on the call side, there's calls above like this coil above the 42. So the market loves this area where it does not have to pay calls or puts out. Like a lot of them expire worthless this week if it closes in this zone, and also next week has similar zones. So that's the general shape of the market. But this video is about inflation, and I'm going back to the EuroDollar futures because look at what we just got. This is our first inflation signal in like 40 something years. We've been in a downtrend, but you can see here we broke out of the trend, and we're pretty close to the previous peak here, which was like, I think they put FedFunds at like 2.5 or something, but it's less than 1 right now. Let me go to a weekly and show the last 40 or whatever 50 years. The interest rates have been coming down with this pattern. And this is the EuroDollar futures international bond trading with LIBOR, and you know, it just kind of crosses this zone back and forth. So towards the upper band is a deflationary move, towards this one is an inflationary move. But it's been in a deflationary trend for about 50 years, and we just broke out of the downtrend today, right now. And so that is an actual inflationary move. And that, let me go to FedFunds and show you where we are. All right, auto, take the log off. Yeah, so you can see. Yeah, so here's the fund rate, FedFunds since the 80s. Has just been coming down, 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 down. I mean, it was up almost 20%. The interest rates were almost 20%, and they came all the way down, financial crisis, to about 0. And then we just went back to about 0. And so FedFunds is only at, what, 77? Yeah, 77 right now. But the EuroDollar futures just put us back at the previous peak, which is like 2.4. And so they're supposed to raise rates, what, in a week or something? Or 2 weeks? And they need to raise it to like 2.4 based on the EuroDollar futures. And they're planning on raising it like 0.5, where it would only be halfway up. So they're behind on their rates. And I don't know what they're going to say now, because this is an actual inflationary breakout where we may start an uptrend. And the uptrends are usually faster than the downtrends, but if you see interest rates going up, that's actual inflation where there's more and more dollars in the system. And prices will go up, but they usually will go up in the stock market also. Inflation doesn't generally make the stock market go down, and usually makes it more expensive. Let me go to the Dow Jones, and we can go back to this time period and show. We're still on weeklies, right? Yeah, let's go back. Let's go back to like the 40s. I can show you the inflationary trend and the deflationary trend on this chart. Log it, auto. Alright, so let's go back to the Great Depression. So the interest rates were headed down here. So we got this peak and this blow off as interest rates were coming down. And this is similar, I guess, to the financial crisis, right? We got sort of a peak and a blow off, and then it started rallying here. And this is interest rates close to zero here. And then this is when we started getting into an inflationary trend here after World War II, into the 50s. We're getting into inflation. The low interest rates started going up and up and up. And you can see the market bulled all the way up until whatever, 65. And then we had stagflation. So, I mean, this is a bear market when you're looking at inflation. And there was high inflation through the 80s all the way here. So we got a stagflationary top. It was a bull market the whole time we had inflation, and then it was a stagflationary kind of bear market that ended in 82. And then interest rates started coming down, and we got another bull market. And then when we started getting close to zero, we blew off, and that was the financial crisis. And now this COVID stab was back down near zero, and this is our first move up away from zero out of the downtrend. So, well, I don't know. Not that it would just replay like that, like you just get a bull market and then a stagflation at the top or something like that, but inflation does not mean that the stock market goes down. Usually the stock market goes up with inflation. Like if you go look at like a Venezuela stock market during their hyperinflation, the stock market was like skyrocketing, but you're still losing, value. You're still losing purchasing power, even though the stocks are going up, because the money is just losing value all the time. But anyway, that's actual inflation showing up on the EuroDollar future chart, and we have a potential reverse of the interest rate trend. And I don't know here what to look for. Maybe we get like a higher high than the last one, and then we get a higher low, and then we actually start an inflationary trend. Like that's kind of the normal reversal pattern. So we'll see what we get here. But yeah, anyway, this is our first actual inflationary signal that we've had in 50 years. And it is actually an inflationary breakout. But I think ironically what's going to happen here is we have the oversupply of all the goods from the supply crunch now. So everyone's just saying prices are higher, and that's inflation, and that is not what inflation is. Inflation is more dollars in the system. And this is an inflationary breakout for monetary inflation. But we're going to probably have supply and demand reversing right now because we have an oversupply of goods and less demand. That should bring prices of normal stuff down, although the oil prices are still really high. But if we see oil turnover, which, oil is pretty high, it's probably going to peak sometime soon. Like we could have supply and demand lowering prices while we're getting this inflationary breakout. And then people will be talking about deflation while we're actually getting an inflationary breakout. That will be funny, but we'll see. But in any case, with regards to the market, like the Fed is talking about raising rates, and then it's stalled out here, and then they're like, well, maybe we're not going to raise rates, and now they're going to be like, yeah, we're raising rates for sure now. Like they might have to do a bigger rate hike than they were planning on. We'll see what they do. But in any case, that is the bond market trading, and that's where the interest rates come from. And yeah, the Fed is. This is a really tough area to call. The Fed has done a pretty good job actually calling it so far. Yeah. Anyway, I don't know what to cover now, but that's the whole inflationary situation that we're getting. Is price inflation there's no such thing as price inflation. That's a nonsense term. Prices can go up and down. It doesn't mean there's inflation or not inflation. Inflation is more units of currency, and that will push prices up generally. But you could have inflation trying to push prices up, and you could have supply and demand pushing them back down. So there's more than one thing that can move prices around. Inflation's one of them. And just because prices are up right now doesn't mean that inflation pushed it to that level. Like there is a little bit of inflation, and there's a whole bunch of stuff going on internationally with supply chains and demand, just like a supply shock, and then high energy prices too. So anyway, that's the whole mix with prices and such, which all of that is probably bad for people, for the consumer, being able to buy stuff they need to survive. But For the stock market, that's